Alright guys, we need to talk about what just happened with Figma's IPO on July 31st, because this might be the most insane first-day performance we've seen in years. Figma went public on the NYSE under ticker FIG, priced at $33 per share, and absolutely exploded on its first day of trading. The stock opened at $85.54, which was already a 150% jump from the IPO price, and then it kept going. At one point during the day, we saw gains of up to 242%. That's not just a successful IPO, that's a complete frenzy. Trading was so volatile they had to halt it multiple times, which tells you just how crazy the demand was. This wasn't some small tech startup either. Figma raised $1.2 billion in their offering, making it one of the most high-profile IPOs of the year. What really caught my attention was that the stock was reportedly over 30 times oversubscribed. When you have that level of investor interest, you know something special is happening. The IPO price was already raised from the initial range of $30, $32 to $33, showing strong pre-market demand, but nobody expected this kind of first-day explosion. Figma is basically the company that revolutionized how design teams collaborate, and the market just validated that in a massive way. This is collaborative design software that companies like Netflix use to build their digital products, and it's become absolutely essential for modern design workflows. The fact that they went public with a 92% adjusted gross margin tells you everything you need to know about the profitability of this business model. So, let's talk about why Figma's IPO performance matters way beyond just one company's stock price. This is essentially the market saying that collaborative design software is critical infrastructure for the digital economy. Think about it. Every app you use, every website you visit, every digital product you interact with was designed using tools like Figma. The pandemic accelerated remote work, which made collaboration tools absolutely essential, and Figma was perfectly positioned for that shift. What makes Figma special isn't just that it's design software, it's that it's web-based and allows multiple people to work on the same project simultaneously in real time. Before Figma, designers were emailing files back and forth or using clunky desktop software that didn't sync properly. Figma basically did to design what Google Docs did to word processing, made it collaborative and cloud-based. The business model is incredibly attractive too. Software as a service with a 92% gross margin means that once they build the platform, every additional user is almost pure profit. They're charging subscription fees for something that teams absolutely have to have, which creates predictable recurring revenue. The customer base includes major companies across every industry because everyone needs to design digital products now. This isn't just a tool for design agencies, it's enterprise software that scales from small startups to Fortune 500 companies. The market opportunity is massive because digital transformation is still in early stages, and every company is becoming a technology company that needs design tools. What's really interesting about Figma's success is how it represents this broader shift toward collaborative software that we're seeing across the entire tech industry. Traditional software was built for individual users working on individual computers. But the modern workforce is distributed, teams are cross-functional, and projects require real-time collaboration. Figma figured this out early and built their entire platform around the idea that design is a team sport. When multiple designers, product managers, developers, and stakeholders can all view and comment on the same designs in real time, it completely changes how products get built. The feedback loops become faster, iteration happens quicker, and the final products are better because more people can contribute throughout the process. This collaborative approach has made Figma indispensable to companies building digital products. Once teams start using Figma, they can't really go back to the old way of working because the efficiency gains are too significant. That creates incredible customer stickiness and makes it very difficult for competitors to displace them. The network effects are powerful too. The more people in an organization that use Figma, the more valuable it becomes to everyone. If your design team is already on Figma and your developers understand the Figma workflow, switching to a different tool becomes extremely disruptive. This kind of collaborative workflow is becoming the standard across all types of software, not just design tools. We're seeing it in development tools, marketing platforms, data analytics, everywhere teams need to work together on complex projects. Let's take a deeper look into the numbers that drove this IPO frenzy, because Figma's financial profile is pretty remarkable. That 92% adjusted gross margin is almost unheard of, even in the software industry. For context, most successful SaaS companies are thrilled to hit 80% gross margins. When you're at 92%, you're basically printing money on every additional customer. The beauty of Figma's model is that their marginal costs are incredibly low. Once they've built the platform and infrastructure, adding new users costs them almost nothing. But each new user pays a monthly or annual subscription fee. This creates massive operating leverage as they scale. As revenue grows, profits can grow even faster because the cost structure is largely fixed. The pricing model is also really smart because they charge per editor, which means their revenue naturally scales with team size and company growth. When a startup using Figma grows from 5 designers to 50 designers, Figma's revenue from that customer grows 10x automatically. The land and expand model works perfectly because teams start with a few seats and then add more as they grow and see value. Enterprise customers end up paying significant amounts. We're talking tens of thousands of dollars annually for large design teams. The recurring nature of the revenue provides predictability that investors love, especially in uncertain economic times. When you combine high gross margins, recurring revenue, and strong customer retention, you get a business model that can compound returns over time. The IPO pricing reflected this, but the first-day performance suggests investors think the growth potential is even higher than the initial valuation implied. Now, let's talk about the challenges, because no company operates in a vacuum, and Figma faces some serious competitive pressures going forward. Adobe has been the dominant player in design software for decades, with tools like Photoshop and Illustrator, and they're not going to give up market share without a fight. Adobe tried to acquire Figma for $20 billion back in 2022, but regulatory concerns killed that deal, which means they're now forced to compete directly. Adobe has been improving their collaborative features and cloud-based offerings to match what Figma provides. The bigger challenge might be AI, though. We're seeing AI tools that can generate designs from text prompts, create variations automatically, and even handle some of the routine design work that humans used to do. Companies like Midjourney and Stable Diffusion are showing that AI can create high-quality visual content, and it's only a matter of time before these capabilities get integrated into design workflows. Figma will need to incorporate AI features to stay competitive, but they also need to be careful not to automate away their customers' jobs. The key is using AI to enhance human creativity rather than replace it, which is a delicate balance. There are also newer competitors like Sketch and InVision that are building collaborative features and trying to capture market share. The design software market is big enough for multiple players, but Figma's early lead in collaboration gives them a significant advantage. The question is whether they can maintain that lead as competitors catch up and new technologies emerge. The timing of Figma's IPO is really interesting from a broader market perspective. We've been in a pretty brutal environment for tech IPOs over the past couple years, with many companies delaying their public offerings or seeing disappointing receptions when they did go public. Figma's explosive debut could signal that the IPO market is finally recovering, at least for companies with strong fundamentals and clear paths to profitability. Investors have become much more selective. They want to see real revenue, real customers, and real profits, not just growth at any cost. Figma checks all those boxes with their 92% gross margins and established customer base of major companies. The 30x oversubscription suggests there's pent-up demand for quality tech IPOs, and Figma provided an opportunity for investors to get into a profitable, growing software company. This could open the door for other high-quality tech companies to go public, which would be good for the overall market. The design software category specifically is hot right now because digital transformation is accelerating and every company needs better design tools. Figma's success validates the entire sector and could lead to more investment in collaborative software across different verticals. However, some analysts are urging caution about the valuation. Jim Cramer mentioned that while Figma is a great company, the stock came public at an already high valuation, and the first-day pop might have pushed it into overvalued territory. That's always the risk with hot IPOs. They can get ahead of themselves in the initial excitement. Looking at Figma as an investment opportunity, this is definitely a case where you need to separate the company's quality from the stock's current valuation. There's no question that Figma is an excellent business. They've built a dominant position in collaborative design, they have incredible margins, strong customer retention, and they're in a growing market. The product is genuinely innovative and has changed how design teams work. The question is whether the current stock price accurately reflects that value or whether the IPO excitement has pushed it too high. When a stock opens at 150% above its IPO price and trades up to 242% during the day, that suggests some level of speculative frenzy. The fundamentals are strong, but the valuation might need time to catch up to the stock price. Long-term investors who believe in the collaborative software trend and Figma's position within it might want to wait for a pullback before buying. The company will need to execute flawlessly on growth and profitability to justify these levels. That said, if they can maintain their competitive advantages and continue expanding their market share, the stock could grow into its valuation over time. The key metrics to watch will be customer acquisition, revenue per customer, and how well they integrate AI features to stay ahead of the competition. The design software market is still evolving rapidly, and Figma's ability to innovate and adapt will determine their long-term success. For now, this IPO has definitely put them on the map as one of the most important software companies to watch, regardless of where the stock price settles in the coming months. So if you found this analysis of Figma's IPO helpful and want more coverage of major tech IPOs and software companies, make sure to hit that like button and subscribe to the channel. But remember, everything I've shared here is just my opinion and analysis. This is not financial advice. IPO stocks can be extremely volatile, especially in the first few weeks of trading, so always do your own research and never invest more than you can afford to lose. See you in the next one.